Hey everybody, it's Christopher Smith. It's my FibLines quarterly update for March 26, 2017. So a lot of things have changed in this recent update. I'm going to try to go through them quickly for you. First, here's our disclaimer regarding trading products. Don't trade with money you can't afford to lose. Be careful. Agenda for the presentation, we'll take a quick look at the FibLines indicator, review some symbols, talk about Tasty Trade, and that should be pretty much it. So I have two basic products. One is called Range Bands, which is a universal trend following indicator. It's available for Thinkorswim or TradeStation. You can get that for free in the TradeStation Trading App Store, or for free for Thinkorswim, and I'll show you that where you can get that at the end of the video. Then you have FibLines, which is a support and resistance indicator that's available for users of Thinkorswim, and that's what most of what this video is going to cover. So this video will last us about 15 minutes, and I'll show you what the FibLines look like and things like that. So. First, let's take a look at the QQQ. So the way the FibLines work, if you're not familiar, is we look at a chart and we identify a low and a high point that represents 0 and 100% of the move. And we use the Fibonacci extensions tool to take that move and project it into the future and draw lines, major lines at the 161, the 261, and the 423% lines. And those are Fibonacci values, Fibonacci sequence. And so the major lines are in red and the minor lines are in yellow, and the idea is we're supposed to identify areas of support and resistance into the future. So it's, unlike most technical indicators, it's a forward-looking indicator. And you can see at some points in the past here just how good a job it's done at finding lows and highs. So FibLines is a combination of the math, which calculates the lines, and it's a combination of manual work, which is the identifying the low and the high point. That's done by hand for each individual chart. And that's what the FibLines indicator essentially is. So let's take a look. That's an example of the FibLines applied to the QQQ. And what this tells me is that this move in the NASDAQ is extended. It's really run to the upside. And I really had to do a lot of updates in this most recent quarterly update, more than usual, just because so many stocks have run up so high, so fast. So let's take a look at some of my favorites. Goldman Sachs is one of them. A big financial, and this one really had an incredible move here, and had some options got called away down here in the 170 area. But we can see that we've run up against the 423% line, which I would predict would be area resistance. We kind of moved on that for a while, shot higher, and then pulled back. So usually when a stock comes up to the 423% line, I'm not in a hurry to reinterpret it because often it will come back, and that's exactly what Goldman Sachs has done. And find some minor resistance right here at this this gray line. Okay, another interesting one is Home Depot. This is another one that got recalculated this quarter. With the old original or prior interval, this was the prior 0-100% line. You'll notice there was resistance right here at 161 at 261, as you would expect, also at the 423. But then we kind of moved sideways for a while. So the original interpretation is in light blue. And the later interpretation, or my more recent interpretation, is here in red. So when Home Depot exceeded the 423% line for some period of time, that's when I determined it needed a recalculation, and I've now recalculated the low and high being 0 being here, and 100% being here, and you can see now that we're moving higher. We had some resistance right here at the 161, which was expected, and now we're kind of moving sideways here at the 261 line. Found some minor resistance right here at the gray area. So that's Home Depot. JP Morgan, similar to Goldman Sachs, was kind of symptomatic of this market where the financials just completely ran away to the upside. And I did have to reinterpret original interpretation you can see here in blue. This was the 100% line, 161, 261, and 423. And I reinterpreted here, whereas this is 100, this is 0, this is 100. And pretty much blew right through the 161. But you can see it's interesting that the original 423 line is right here at the 261. So JP Morgan is also right up here at its 400. In this release, however, I wanted to show it to you. However, I wanted to show it to you because it's symptomatic of what's going on in retail. It's an upside interpretation, meaning the lines are still going up. But if you can notice, it's been going down here, and we found some resistance, some support at the 161 line. We've broken down below that. So we're looking at like a 2.5 year low in Bed Bath & Beyond, and it's sort of symptomatic of what's going on in the retail world, and it doesn't look good. And one thing you'll notice here is I've added to my charts the IAD percentile. That's because I'm becoming more interested in trading options, and the implied volatility rank, or where the options trading currently stands with respect to historical averages, is really important. You want to sell options when they're near the high end of their historical rank, and avoid them or buy them when they're at their low end of the rank. That's why I've added that. Okay, next up we have Expedia. No changes in the interpretation for that. However, I've been using Expedia pretty much for all my travel booking lately, and it's a pretty good looking chart. There's a lot of consolidation going on in the online travel business, and I think Expedia is going to be a winner. It's going to be a survivor. What else? We have Facebook. Facebook's been one of my favorites. If you've been following me, you know I've been with this one for a long time. I don't pay too much attention to the FibLines for Facebook because the fundamentals just seem to come through, and it's just a great company, and they usually sell up after earnings, as they did here, but they didn't most recently, as I pointed out in my last quarterly update. So just pushing up against an all-time high, and expect we're going to see higher highs in Facebook, and I'm still loaded up on the long side there. Kraft Heinz is an interesting one that has been in the NASDAQ 100 for a while, and I just added an interpretation in this most recent quarterly update. I haven't had one prior to that because it really wasn't updated. I couldn't find a satisfying interpretation. So here I found that this is the 0 line, here's the 100% line, ran up to the 161 and then pulled back, and that's usually a pretty good indicator that I have a good interpretation. You want to see a meaningful reaction off the 161, which means that the measured move you've identified obeys the Fibonacci principles of you're going to see a resistance at 161% of that move, which is exactly what we saw here. Similar move against the subline here, and then pulled back almost exactly to the 100% line. That's why I knew I had a good interpretation. So Kraft Heinz, I don't have a position in it, but it's a new symbol, and I've added an interpretation here, and I think it's good for the purposes of showing you how the lines work and how I calculate them, or how I interpret them, I guess. Okay, Netflix, another big NASDAQ winner, right up against the 423% line here, almost a textbook bounce off of that. Perfect 3-bar bounce off the 423 line. What else? While we're in the category of textbook, take a look at Tesla. Look at the way it came up and just tagged the 423 line almost to the T. I think it was within $1, and then turned right back around again. And Tesla's a great stock for option sellers, and I have a big wide iron condor in Tesla. I'm sticking with that, making some money on that now. You can also notice, though, that high did correspond very closely to these old prior highs. But yeah, at the time, I noticed, I saw this the day up, and I was like, wow, that's a great top right there. And I did take an option position. Unfortunately, it was a demo account, not a real account. Oh, well. Okay, PayPal's. I've been with this one for a while. It hasn't worked out really that great, or should I say it's taken a lot of patience. But finally it started, I got in kind of in the high 39s here, and it had a run up to as high as 44 and sold off, gave it all back. But I stuck with it, and I think it's going to work its way higher over time. You know, a cool feature of Thinkorswim is you can hold your mouse over these red things here and see what the earnings were, for example. They were estimated to make 33, and they made 42. Estimated to make 26, and they made 35. Estimated to make 29, and they made 36. Estimated to make 29, and they made 37. So, I mean, they seem to be beating earnings consistently. So I like PayPal. I'm sticking with it. I like financials generally also, especially web-based ones. What else? That's PayPal. Tesla we looked at. Okay, so I've reworked a number of symbols. I'm not going to go through all of them here. I'll include that in the in my email. And I do want to show you a couple new symbols that I've done in this release. One is Massimo, M-A-S-I. You know, I'm a little bit late on this one. It's been the stock's just rocketing to the upside. It's actually exceeded the 423 line. You know, I very briefly paused at the 161, the 261, and then just shot higher and blew right through the 423. I haven't tried to reinterpret it yet because, again, I'm not in a hurry to reinterpret things when they break the 423. The fundamentals look good. I believe it's a medical device company. So I add it. Look at this. Yeah, estimated 51 cents. They made $3.97. Huge. Estimated 41 made 52. So don't jump into this one. Wait for it to pull back, but keep an eye on it. Another interesting one is MSCI. This is a financial provider that's behind a lot of the indexes that you see, the MSCI Europe Index, etc. I just noticed this one on this spike to this all-time high. And I went and tried to do an interpretation, some original interpretation. I just happened to notice this one was in blue, and I thought it was really uncanny the way we had, it was almost musical, the way you had resistance right here at the 161, the 261, and the 423. I mean, that was just a beautiful interpretation. But going forward, you know, we came up against that all time, blew out, so that wasn't a good interpretation anymore. But I thought it was instructive to keep it in there to show you what the prior or what my kind of a draft interpretation looked like. So I went back and here's my new interpretation. That's your 0 line, that's your 100, and the 161 happens to correspond almost perfectly with the 261. So it's amazing the way these lines work out. And then the old 423 is right here at the 261, and you'll see the 423% line is right up here at about 110, which is where the spike was. So the news was this company was going to be taken over by Standard & Poor's since they're a financial information provider. It was going to be at like either $100 or $120 a share, and it's pulled back quite a bit. So I think there's a pretty good chance that this one is going to be taken over at that old high or better. And I don't usually speculate on takeovers, but if you look at the financials here, beat the earnings, you know, the story's the same, and I think there's a dividend yield here as well. So even if it doesn't get taken out, it's had a good run, and the fundamentals are solid as well. Last one is Selective Insurance, SIGI. I've been for a while. I caught this on my my regular scan that I do in IntelliChart, the new high, positive earnings, earnings growth greater than the PE scan. So been listening for a while, done pretty well. I just wanted to point that out that I've added it. Okay, a couple other things very quickly. We've taken a look at the symbol reviews, how to get the indicators. Actually, let's talk about Tastytrade first. Now, since you use Thinkorswim, you probably know about Tom Sosnoff. He was a creator of Thinkorswim, and when Thinkorswim got bought up by TD Ameritrade, rumors are he got about an $80 million cash payout, and he went and started his own brokerage, originally called DOUGH, D-O-U-G-H, and he's now created Tastytrade. And he has a financial network that they broadcast 8 hours a day during business hours. And it's part news, it's part entertainment, but it's a lot of education. And you think about people when they learn how to trade, you know, it's very hard to learn how to trade options with a 4-hour weekend webinar or watching a 10-minute video every night. This is a financial network that intersperses education in everything you do. And they have some comedy, they have some news, they have some just laughing and telling stories. But then they have these little sections where they talk about, they have a section called market measures where they'll go back and talk about their strategies, and they back tested them and how they apply. And they also have like these little hallway conversations between Dylan Radigan and this guy, Dr. Jim. So they'll just stop and have a 15-second hallway conversation about, you know, cost basis reduction or beta weighted deltas and things that just, you know, it takes time for them to sink in. And I've really learned so much from this network in the 2 months I've been watching it. And I heard a saying recently that you are the average of everyone you associate with. So, for example, if you hang around with 10 or 15 different people, in some ways you're the average of them. And it's kind of true. And by watching this network, you actually associate yourself with people who know more and who've got experience. They're floor traders. And, you know, I've followed them. They have a thing called Bob the Trader where you can follow the trades. I've used their systems, and I've actually made money. I've turned my account from a loser into a winner. And they also have a brokerage called Tastyworks that has the financial advantage that there's no commit to dollar contract entering a trade and 0 commission on closing trades. So that is a positive financial incentive along with the 2 years of Bob the Trader. Check it out, Tastytrade. It's really changed my financial life, and I watch it every day. And if you can't watch it during the business hours, you can watch it on the weekend, evenings, and YouTube it to your heart's content. Check it out. It's great. It's really changed my financial future, I think. So in terms of where to get the FibLines, you can get them on the FibLines store at fibtools.sells.com. You can get the range bands indicator, that trend following indicator I was talking about, for free for thinkorswim. You can also get the FibLines free for thinkorswim for the major indexes, the Dow, S&P, QQQs, NQ, TF for the Russell, and ES for the S&Ps, or you can get the FibLines full indicator for 1 year for $99, and that includes 4 quarterly updates, which I'm providing right here. And that can cost $99. You can buy that right through the FibTools Sells store. You can also get the range bands free for TradeStation on the TradeStation Trading App Store. You can see by going to that website that I am one of the top free systems, indicators and strategies, among the top 4 most popular. So that's it. Thanks very much for watching the video, and that's it. Have a great day. Good luck with your trading, and all the best.